Good evening, traders. It's Mark here from the Day Trading Room. It's coming up to midnight London time on Thursday, the 7th of October, and I want to run through the trades I got up to on Wednesday, the day after that monster trend day on Tuesday, and today. As I mentioned in the video on Tuesday evening, I think it was, I was expecting an oscillatory type day, a rotational type day, the day after a heavy trend day. This is because often the market needs to digest the news, it needs to take time to accept its new price equilibrium level. It doesn't always happen, but generally the day after a trend day, I'm looking to buy support and sell resistance. And that's exactly what I did on the Wednesday. We'd pushed up, and this actually was the overnight high here. I've got the dotted lines in, but they're from today's action, so ignore those for now. The overnight high happened to be around 10.915 on the Dow on the Wednesday, and so that was a perfect place to get short. Um, Really, if you're extra aggressive, you would have taken the short at the high, the prior day's high, but I just wanted to wait for a little bit of an extension, just wait for some confirmation before I come diving in, standing in front of trains. So that was it. We took a nice short there, pulled back down, and exact midpoint was my exit on that. A braver trader would have taken it to the other extreme and closed it there. But for me, that was enough for me on the first trade, as it still wasn't clear at that point whether we would, it was actually going to deliver range bound trade or not. You don't know. You still got to manage your risk. So that was it there. So we just popped under here. It was there. My stop was just above there. We came down here and we tagged what was now becoming a support level, pushed back up, made this lovely little low candle, a little spike in volume, little low ticks. Normally you'd think, okay, it's running to the gap, and that was actually one of my hypotheses to fill the gap at some point during the day. But when you see a candle form with a tail that penetrates through by a few ticks, pushes straight back up, closes high here, retests a little bit, there's no interest, then you can see the ticks aren't playing ball, the volume's gone low, it's worth a buy. Worth a buy there. Where's your stop? Obviously just below that spike low. If it is a spike low, it's not going to revisit. Where's your exit? Straight back to the midpoint of the range. Again, all you're doing is playing the range, you're waiting for the buying or selling to dry up, and you're waiting for that supply and demand balanced shift from one to the other. And that was it. This really was a missed trade. That was a nice little push up that just failed, and you can see really where the obvious trade was on that. If I get my drawing tool back out, you can see where the tape buyer was. There, was just holding it when that went. There was your short, and they just stopped there. Didn't take that. What I did take though was one more trade for me on Wednesday, and that was this. As we pushed down to the bottom of the range, we tried to push back up, didn't quite make the midpoint this time. That's useful information. Buyers aren't quite as aggressive. Every other time they've pushed it at least through the midpoint to around here, if not the high. So seeing that and seeing it roll over again, I'm alerted. I'm not going to take the break because it's not something I do on a rotational day. I don't take breakouts, even though I had a good target here at the gap. What I will do, however, is take the first pullback if I see the breakout is significant, and that's what I did in this case. We had some good volume, some low ticks, we broke through. More importantly, if we'd have broken through and we tagged the gap, I wouldn't be involved in it. But we got this pullback right to the break point, then we start to roll over. That's a nice place to go short. Where's your stop? Back in the range. You've got a nice little risk, small risk here, and my exit, I'm looking for that gap. Didn't take very long, 4 or 5 minutes, done, and that was it, done for the day on that. And it continued to push back up into the range. One thing I do want to say is how important the VWAP is when you're looking at rotational type days. You notice it never gets very far from the VWAP before pushing back, and notice how many times it tagged the VWAP and used that as a level, as a sort of pivot level, if you like. So if you haven't got it, it's something that's worth putting on your charts. So let's run through today quickly. Today, great day for me. Really got in tune with the market. Let me background drag this so we can see a bit clearer. Yeah, today was one of the days we gapped up, and we gapped up to that all important level 11,000 on the cash. The overnight high, we'd pushed up to about 11,023 equivalent, and then we'd pushed down and opened about 11,000 on the button. So I took a short just as a fifth candle as we started to push back up here. A short here. It was a little bit speculative. I just thought that perhaps 11,000 is just too much. It's just too much because we pushed quite far. The gap up was there. Overnight action had shown me there were some sellers in the frame. So took a short there. My stop was obviously just above there. I didn't want to get caught on the wrong side of anything. It broke down a few minutes later. I was put a little bit earlier with that, but nevertheless got it nicely. It broke down there, took off 90% of the position at the yesterday's high, and we started to roll back up. I still had one contract left. As we pushed back up, it became clear that it was going to be a nice place for us to re-add to the short and get those get the 90% of the trade back on. So there was our support level there. We pushed back up to here. I literally, as soon as we tagged it and failed, I thought this is well worth a go. Well worth a go. The ticks were low. It only just struggled to pull back up to zero, and as you know, I like to wait for that. Pull back up there. So there was my short. There was my stop on that batch, and in fact, I was going to use the whole stop on the whole lot there. Push back through. No need to close out. You just hold on tight, and I'm out of the gap fill. So two great trades there. Even better that I managed to get not only that chunk, but then re-add at a better price and get the rest of it. So that was great for me. Didn't all out of the gap fill. Didn't trade any, so didn't get that on the end of any more of that. Two more trades for me. If we quickly run through them, 5 o'clock came and we just saw we're forming this wedge downtrend here, and we just poked through and pushed back up, and I just thought, oh, ticks aren't that impressive. Volume, little flush in volume, so I took a long here. I took half off as we tagged this trend line. Didn't want to take too much risk, which wasn't an awful lot of ticks, I can tell you. I was looking for a further rotation, perhaps back up into this level. We didn't get it. Rolled back over, stopped out in the second half there. So no great shakes there. Anyway, waited. This was starting to pick up steam, and it really got a little bit of panic on. Actually, we've got this low tick here, really low tick here, flush in volume, but that happened to be below the 10,900 Dow cash, and I like to look at those levels, psychological levels, flush below it. And as we start to come back up, this is well worth a go. Quite aggressive with my long. A buy here, a stop under here, and a target of this downtrend line. And at the time it was around here, because if it pushed straight back up, that would be your target. Bang on, caught that perfectly, almost the low of the day. But about 5 ticks off it. It was a great entry for me. Pleased with that. We started to push up. We just drifted, and it was just so painful to sit through. But really, when there's no continuing selling, you just think, well, the natural path of least resistance for this market only is up. So held that position as we pushed up. I scaled a little bit here just as we got that pop, and then the final batch here. So that was a great trade for me. 26 ticks on the last scale. So perfect. Really, you can see we just then continued push straight back up to the midpoint, and it would have been a good trade to hold. But that's enough. That's what trading's about. It's about grabbing high odds, a good percentage chance of a chunk. It's not about getting the whole moves. At least it's not for me anyway. Very quickly, I've had a few questions on the email, and I'm going to answer a question a day on the videos if I get time, so that everyone can hear. Why am I doing this blog was one of the questions, and that's really just because I used to write a trading journal. I find it's easier to talk about my trades and talk about the market, and it's better for me to be able to go back and look at the day, look at the action, see what sort of trades I took. Got the chart in front of me there. I can hear myself commentating where they counter trend, where they trend, and it just helps to grow as a trader. The other question was, what's my background? I've done nothing but trade. Finished university, started trading in 2001, and I've not looked back. March 2001, so 9 years, almost 10 years trading. Traded on the London Stock Exchange and futures when I started. It became clear that CFDs in the London Stock Exchange are far far too expensive. The commission bill was just absolutely horrendous, and I was always using futures, Dow, FTSE, DAX as a proxy for my CFD trades anyway. So it made sense to move to the more liquid market that wasn't affected by size, or at least not affected by my size, and really cheap transaction costs, great platforms, and just generally more functionality for traders, more suited for day traders. So that's what I did, and they've not looked back. So I'm still trading here, 10 years, coming up to 10 years on in March, and yeah. So that's it. So any more questions, you can leave a comment on the video. Um, the high frequency trading video should be coming this weekend. I've done part of it, got another part to go. Interesting topic actually. Glad someone's mentioned that one. You can email me, Mark at thedaytradingroom.co.uk. Visit the blog www.thedaytradingroom.com. Got something in the wings for that. So which is hopefully going to help traders progress. So that's something to keep an eye out for. Go into more detail with that probably next week or the week after. That's it, guys. Good trading, manage risk. Don't forget non-farm payrolls tomorrow, so watch your stops. Don't get caught out, and we'll have another video soon. Good trading.